In finance, we can get lost in the models, the theories, all the math behind the market. But honestly, the most unpredictable variable of all, it's us. It's the human element. So today, we're going to shift our focus from the balance sheet to the brain and really explore a behavioral perspective on financial goals. So let's start with a number, 55%. What's that? Well, according to a Gallup poll from 2019, that is the percentage of Americans who said they felt a lot of stress the day before. That figure, by the way, just towers over the global average. This isn't just a statistic, you guys. It's a symptom, a sign of a massive disconnect between our wealth and our well-being.
And this contrast brings us to what some call the American paradox. I mean, think about it. Since the 1950s, real median income has more than doubled. Our houses are 2.5 times bigger. And yet somehow we are more stressed out than ever. So, if all this economic growth isn't the key to well-being, then what is?
Okay, so to unravel this, we're going to walk through 5 key steps. First, we'll dig into this happiness paradox. Then, we'll uncover what money's greatest value really is. After that, we'll map out a path to financial freedom, rethink our whole financial mindset, and finally, we'll look at a critical knowledge gap that's holding so many people back. Right, so if more money and bigger houses aren't the answer, what is? Let's get to the heart of it and uncover the true intrinsic value of money when it comes to our happiness and well-being. Researchers have been chasing this exact question for a long time. If you take away income, where you live, even your level of education, what is the single most powerful thing that predicts happiness? The answer, it turns out, is surprisingly simple. Psychologist Angus Campbell's work led to a pretty startling discovery. Our sense of well-being, our happiness, isn't really tied to our objective conditions, how much we make or where we live. Nope. The number one predictor, more than any other single factor, is having a strong sense of controlling your own life. This quote from The Psychology of Money just nails it perfectly. It says, "Control over doing what you want, when you want to, with the people you want to, is the broadest lifestyle variable that makes people happy." That's it. The greatest thing money can buy isn't fancy stuff, it's control, it's autonomy, it's having power over your own time. That is the highest dividend money will ever pay. Okay, so if control is the ultimate goal, how do we actually build a financial life that gets us there? We need a roadmap, right? A practical framework, a clear path to follow. And we can really break this path down into a simple 3-stage journey. Step 1 is financial peace. That's when you're not constantly worried about paying off debt. Step 2 is financial security. Your basic lifestyle is covered, no sweat. And the final goal, of course, is financial freedom. That's when you work because you want to, not because you have to. Now, getting through these stages, it's not really about being a wizard with spreadsheets. It's about psychology. It demands a pretty fundamental shift in how we think, which, as you know, is the very core of behavioral finance. Your mindset is your single most powerful financial asset, period. And this simple equation right here frames the challenge perfectly. As finance students, you're deep in mastering that 15%, the technical side. But true financial success, it's absolutely dominated by the 85%. That's your behavior, your psychology, your habits. Getting that part right is the real game changer. So let's apply this behavioral lens to a few key ideas. You already know your education is an investment in human capital. But the behavioral challenge is to actually treat it that way, to rigorously analyze its ROI, not just in terms of future salary, but in future autonomy and career options. Okay, next up, let's reframe how we look at a job versus a career. A job basically services your immediate needs, your balance sheet. A career, on the other hand, builds your human capital and aligns with your deeper goals. The strategic move here is to get from the job to the career as efficiently as you possibly can. And finally, let's redefine what rich even means. It's not about the flashy cars or the big houses. It's a simple cash flow equation. Your income exceeds your spending. That's it. True wealth isn't what you buy. As the saying goes, wealth is what you don't see. It's the assets working for you behind the scenes. But here's the thing. Putting all this behavioral insight into practice runs smack into one last major hurdle, the knowledge gap. There's this huge chasm between understanding basic financial ideas and having the advanced literacy you need to actually build wealth and take control. The data on this tells a really interesting story. A study of Dutch households found that, basic financial literacy is pretty high. Most people get concepts like compounding and inflation. And on the surface, that sounds great, right? But here's the catch. The moment the questions shift to more advanced topics, the actual tools you use to create wealth, like risk diversification or the real difference between stocks and bonds, well, comprehension just falls off a cliff. Very, very few people grasp these absolutely critical concepts.
And this isn't just academic. It has massive, real-world consequences. Just look at stock market participation. For people with low financial literacy, only about 30% participate. But for the highly literate, that number doubles to 60%. This knowledge gap literally creates a tangible wealth gap. So we end with a question, and it's one I really want you to reflect on. You are here becoming experts in that 15% that is finance, but are you consciously developing the other 85%, the personal? Are you actively building the mindset and the discipline that will ultimately determine your ability to find not just wealth, but true financial freedom?